The number one wealth mistake investors make is that they think that building wealth is about buying low and selling high. That's wrong. It's why 95% of investors eventually lose money, get stuck, or stay frustrated for decades. But today, I'll show you the number one wealth mistake that's quietly draining your future profits. And more importantly, how you can fix it once and for all. Stick around, because by the end of this video, you will see why wealth isn't about chasing appreciation. It's about building unstoppable cash flow. So let's dive in. Let's talk a little bit further about the number one mistake investors make. If we go back to 2008, this is my 37th year, so I was very much involved in financial services at that time. The real estate market was booming. Properties were doubling in value. People were buying anything they could to get their hands on, assuming prices would always go up. But what happened? The bubble popped. Property values collapsed by 30%, 40%, even 50% in some areas. Millions of investors, ladies and gentlemen, lost everything. Why? Because they were depending only on appreciation, something they couldn't control. They gambled instead of investing. They weren't building wealth, they were playing financial roulette. Was that you? So here's the truth. Cash flow is king. If you attend any of my seminars or workshops, you know that I often say that cash is king and real estate is queen. When you invest, your first priority isn't how much this goes up or how much that property is going to appreciate, but it's how much consistent, reliable cash flow can this property produce. Appreciation, ladies and gentlemen, is a bonus. Cash flow is the foundation. Think about banks. Banks don't gamble on appreciation. They make money every single month through cash flow and interest payments. Why aren't you doing the same thing? They always position themselves to what? To profit. Whether markets go up, markets go down or sideways, that is the banker's mindset. And if you want to truly build unstoppable wealth, you must shift out of the borrower's mindset, the one that chases, and move into the banker's mindset, the one that builds. Let me give you a quick example here. So we have two investors in 2007, right? Investor A bought 3 properties, banking on appreciation, no cash flow. Investor B bought 2 properties with modest appreciation potential, but strong positive cash flow. Then what happened? 2008, 2009, 2010. The investor A lost all 3 properties to foreclosure. Do you know anyone who fell into that trap? Who fell into that situation? I do. Investor B, their cash flow kept paying their bills even when the property values fell. Today, investor B's properties have not only rebounded, but his total portfolio grew massively over time, all because they built on cash flow and not hype. Ladies and gentlemen, here's a very simple thing to think about. Cash flow plus liquidity plus locking in appreciation gains equals thriving and expansion. If you have a strong monthly cash flow and you maintain liquidity, you can stay in control no matter what the market does. This is something that I spend my practice helping investors position themselves to increase their liquidity over time, while at the same time creating more cash flow. My objective is to teach you, how do you double your property equity position? How do you learn the system of doubling your property equity position and your cash reserves without market losses and without taxes? And guess what? When you survive a downturn because of this strategy and have cash on hand, this is when my clients tell me how much they love me. That's when you can buy even more assets. You have more opportunities. You have more possibilities of position yourself to expand your real estate profile. Why? Because you are increasing your liquidity. That's what banks do. That's what you'll learn how to do with the trifecta wealth system that I teach. If this is making sense to you, if you're tired of riding the market roller coaster, if you want to position yourself like a banker, not a gambler, so if you can finally build real wealth with certainty so that you can position yourself like the banks, I want to invite you to take the next step. I want you to download my free guide, the Trifecta Wealth Blueprint. It's packed with simple illustrations showing you how to set up cash flow, liquidity, and protection against market losses. This is critical. Building protection into your real estate portfolio is critical to avoiding the common mistakes that lead to losing money and running out of money. You'll see that chasing appreciation versus learning how to lock in appreciation is a rookie mistake, and why cash flow and liquidity are the power moves of the wealthy. Take a moment, click on the link, grab your copy, and start positioning yourself to win no matter what happens in the marketplace. Listen, ladies and gentlemen, I want to thank you so much. My name is Jeff Taylor. I'm Carol Taylor's son from the west side of Detroit with clients everywhere in position of helping you learn the strategy on how to double your property equity regardless of market conditions, doubling your cash reserves without market losses or taxes, and doubling your cash flow without the need of the tenant. One of the things we focus on is teaching the investor how to become interdependent of the bank and their tenants and watching their cash reserves and cash flow grow even in challenging economic times. I look forward to seeing you soon. Take a moment, get that ebook, get that free report, and I'll see you in my next class. Take care.